What's up, guys? Welcome back to another episode of She Collects Cards. Today I'm shooting from my garage, so you can see how unorganized we are here. But yeah, just wanted to address the elephant in the room or elephant in the market. You know, in terms of, hey, like the market is indeed crashing. I think something that I saw today was that Silver Prism Trae Young's rookie card PSA 10s were still declining even after his crazy game to bring his team back alive after game one against the Bucks for the Eastern Conference Final. And so there are many signs all around that show, hey, is the market cooling? Hey, if it is it ever going to go back up? That's always a concern for many. And, you know, simply those who came in, you know, very recently, and here I'll probably refer to people who are new in the last 6 months of joining, you know, just questioning, did I put in too much money? Am I going to lose everything? Is it going to go down to zero? All those concerns, I hear you, and I'm here to address it today and give it some, you know, my point of views and perspective on where I think the market is and what we can kind of expect ahead. And of course, I'll give you some points, you know, to mention of what I'm doing right now in this cooled market. All right, so diving in, first of all, let's understand where the market is. So if you guys have been in this, you know, market for more than 6 months, essentially, you know that the first quarter of this year, so the first 3 months of the year, was just absolutely insane. Every day you wake up and you realize that your card had doubled, and then you sleep one more night and you see again that your card had doubled again. And I'm sure some people may have, you know, made a lot of lucrative sales at that point, got their profits, and were happy with it. But I know that there were many of us, including myself, who just mostly held on to our collection, you know, call them diamond hands, right? And, you know, really believe that this could really go for a long time. But, you know, market just definitely started to, I would say, you know, soften or not have as an explosive as growth as it did in the last 90 days. And started to see some declining, I think, especially with some of the key cards of LeBron's. The light just went out, but I think we're okay. Came back on. Yeah, LeBron cards, certainly. Of course, the major modern cards, I think Luka Doncic's cards were at $1,500 at one point for his base rookie, and started to come down to 13, 12,000, and now I think it's below 1,000 certainly, and hasn't recovered quite a bit. And so, you know, we have to kind of take a step back, I think, in order to understand how did we get ourselves here. So if you kind of backwards, rewind back to, you know, Zion's rookie year and the first set of Panini products that had come out, Zion, you know, not just from a sports card market industry, but across the board, right? Nike, of course, and many other industries like Gatorade have jumped on to the Zion hype and really believe that he was the hidden gem, the hidden diamond that was going to be the crown jewel, that was going to be, you know, the next LeBron James, Steph Curry type of player. While he has a lot of room to prove himself, I think it's going to be his third season coming up in the fall, and hopefully he'll, you know, be better in shape, and you know, his injuries will be you know, less you know, frequent moving forward. But he certainly didn't kind of perform up to any of the brands and investors' expectation, in my personal opinion. So I mentioned all that story about Zion because that history lesson is important to understand why we saw the crazy uprise of basketball market, which kind of drove the entirety of the sports card market, in my opinion, in the last 2 years essentially. So people were ripping Zion like crazy, and, you know, it didn't matter how many you know, Zion Williamson base rookie cards were out there. People were ecstatic. It was quite a great run. I would say, you know, hindsight 2020, that run was longer than it should have been, even going well over into his second year, in my opinion. You know, given the fact that, you know, he pretty much didn't play his entire first year as an NBA rookie, and then New Orleans not making it into the bubble. He really didn't play many games for his values to be that high. So fast forward to December 2020, early January 2021. I think a lot of the experienced investors who've been kind of collecting for a long time started to realize that, hey, if these modern players with 2 to 3 years of experience, their card values are this high, how can a Kobe's rookie card or LeBron's rookie card or MJ's rookie card be this cheap compared to some of these younger players who have a lot more growth and a lot more to prove, in a sense, in terms of their value. So those cards were starting to get picked up, and as I've mentioned in my previous videos, there were institutional money coming in as well. So it wasn't just investors like us, retail investors, but it was organizations, institutions, venture capitalists, hedge funds coming in and publicly claiming that they are forming a specific portfolio and attributing a portion of their asset management into sports cards and other collectibles. So that was the run that we saw essentially. And I know I'm a big LeBron collector, so I know his card values the best on top of my head. His card prices were at 11K, I believe, in December, up all the way up to 43K officially as an eBay sale price at some point in March. And we've seen that kind of come down, quite dramatically, I would say. And when I was in Dallas, it was at roughly 19 to 20K in terms of trade value. And now we're seeing it kind of sustain value at 15.5K for LeBron's Topps Chrome PSA 10. And some of the hypothesis out there right now is that his price, at least because LeBron, if you think about it, in the basketball world, he is the most proven active player. Probably after him would be Steph Curry, in my opinion, where they have nothing really to prove. Even if he wins another championship, it'll be great. Even if he doesn't, he'll still be a great player. If he announces retirement today, I think a lot of people will attribute the game to him and how he has transformed it. And he's, made a lot of, changes and impact outside of the court as well. So I give that example because, it's not so much speculation built into his cards, but maybe some level of championship speculation in there, certainly for this year. But he is, I would say, about 80 to 90% proven, sort of safe bet. So seeing that his card has flattened out and it has hit its rock bottom, that gives me some comfort, certainly. So that's where we are in the market today. We have seen a massive up. I mean, nowhere have I ever heard of a market this crazy, this fast, I guess outside of crypto, but that's another conversation. But it has seen that quick rise in less than 90-day period, and then it also has seen a quick decline in more or less 60 to 90-day period. So where do I see the market? I think I've mentioned this a few times too, but I'll repeat it here again. The market is certainly getting smarter, which is a great thing actually if you think about it. You don't want to have this unsustainable market continue, because then the crash will be even harder, in my opinion. So I like that the market is getting educated, because in general, as the knowledge of the market grows, I do believe that it'll kind of become more stable, and there will be less of people getting ripped off, or less of people who are trying to manipulate the market in order to win it all, if that makes sense. So I think that the market for specific pockets have definitely floored. And you may be asking, which markets are those? And I would consider most players, except players who have been drafted or started playing professionally since 2015. So anything before that, so players and teams and whatnot that have already proven their worth, right? So those cards, I won't go through an example list, but I think those markets have floored. Yeah, it can go down another 10%. Maybe it'll go up 10% and go back down 10%, who knows? But I don't think we're going to see, again, another LeBron example is that the Topps Chrome card will go from 15K down to 5K in the next 30 days, but we will see some sort of stability and steadiness built in. That's just my take on it. So given that understanding, what am I doing right now, right? Am I doubling down? Am I selling still? What am I doing? A couple things that I want to share with you is, one, I am still buying. I'm not buying, the crazy cards right now where I'm spending tens and thousands of dollars necessarily, but I'm buying those cards that I have been eyeing for a long time. And on top of that, I'm actually buying cards raw. I have seen, cards in better shape than in the past that are sold raw, and that's probably because both BGS and PSA has stopped their regular services, so it's just not worth it for cards basically under the value of $500-$600 for folks to get those graded. So yeah, I'm definitely buying those key like soccer players. If you guys follow my Instagram, I'm a big South Korean soccer fan, and so buying all of those key players, as well as some baseball auto cards as well. And when I'm buying these, I'm not just buying, hey, what's his 2019 Prism card, but really I'm looking at either an autograph card, whether it's on card, or if it's available on card, I try to get those over sticker, but sometimes it's not available, so I do get the sticker autos too. And also numbered is just good because you already know there's a limited print run to that, and there is a scarcity to that card, so it will hold better value and be sought after more than something that isn't, right? So that's what I've been looking for, and good deals in general. I like certain inserts, and so if people are offloading those because one, they're not bullish about the market ahead, or two, they already bought in at such a low price, they're okay selling them, I do try to snag those when I can, especially in soccer and basketball right now. And then thirdly, what I'm buying is F1. And I can give you a breakdown in a different video of why I'm investing into F1. But, I like the sport. I like sort of like the dramaticness of the sport. But at the same time, there's also an investment value to it, in my opinion. Like, for example, if you I need to go check the price on this. If you break a $1,500 basketball Prism box from this year, and you pull the best card, let's say base LaMelo Ball, its price is this, right? Versus if you buy a $700 Sapphire Topps Chrome F1 box right now, and you pull a base Hamilton, not even the variation Hamilton, that value is going for this raw. So those are, I think really good return. And of course, we don't know actually how many LaMelos are in each box or each case, or vice versa for Lewis Hamilton's card or Max Verstappen's card. But, it's definitely worth the gamble, in my opinion. The return and the probability to hit a good card in that set is much, much, much higher than, say, basketball, baseball, and even soccer, in my opinion. So I've been doing that right now, actively searching on eBay and very small and niche F1 forums as well. So those are some things that I'm doing right now as the market is kind of penetrated with skeptics, critics, people who are even saying like the National won't be worth it. I don't know about that. I think the National is really going to be a great time to trade, to talk cards, and just build those relationships for future deals as well. But before I leave you guys, I want to mention a couple things from Jack Bogle, who, as founded index funds and founded Vanguard. And I think I get a lot of investment thoughts and thought bubbles from his learnings and just his line of thoughts. So, I'll speak to maybe a couple of them that he said. So first one, he, always stresses is reversion to mean. What that means is, don't expect past to always be an indicator of the future. So, meaning like a couple things, like for example, just because the market has been cooling for the last 60 days doesn't mean it will continue to cool for next 60 days. But it also means that you can't just look at the past historical performance of an index or a stock, or in this case, a card, to say that its price point should be back to X dollars, right? So I think it's always good to know those information, but don't let it be the only indicator of what your risk appetite is going to be. And another thing that he always talks about is time is your friend. And so building an index fund means that you as a retail investor, we don't have the time, the resources, the knowledge, the education even to be involved in day trading. Some of us I know, especially you Wall Street bettors and crypto folks, I know that you feel like what you have, the skills that you have, the confidence you have can get you there. But I really believe in having a longer perspective in investing, putting your money into something. Longer meaning, like, I genuinely think that you should wait it out for at least a year plus in order to determine if what you have been doing is correct or not. I do think that most of us were going to have a average life length that's longer than our parents probably in the previous generation. And so kind of thinking it long term, like, I don't understand why people want to make millions of dollars overnight and then call it quits and then travel for the rest of their life. Like, that sounds nice, but you're gonna get bored too. And I think if you're truly an intelligent person and you're a person who's attracted to learning and growth, I don't think you would want that kind of lifestyle. Yeah, sure, maybe you can work in different cities, different countries around the world and have that flexibility. That'll be amazing. But let me tell you, like, if a human being is not in some kind of a structured lifestyle or under some kind of level of healthy pressure and stress, we do kind of digress, and we do become kind of we let ourselves go, right? And we've seen those cases of people. And so keeping your mind sharp, keeping your body sharp, and really taking every investment that you do, even whether it's your job and every investment doesn't have to be money related, right? Or profit making. That's just my personal take. If you really care about your health, investing in whether it's a gym or gym gears at home, or certain applications, certain health substitutes, things like that, I think it's a great investment for yourself too, right? So think long term is what Jack Bogle is saying. Getting rich overnight, you hear those stories, but that's literally like 1 in a billion story. And if you don't trust me, go Google. I'm not plugging for Google. Go Google, like the last 10 years, lottery winners, what are they doing today, right? Like, you will be blown to your mind if you don't already know what they're up to with their millions of dollars of winning overnight. And then last but not least, I want to leave you with, you can't escape risk is what Jack Bogle always mentions, is like, you can't bulletproof yourself all the way through that you become invincible. I think that's like a big fallacy and false understanding of like diversification of portfolio to kind of like the confidence level that I see in a lot of Gen Z folks, where they just absolutely don't feel like they can lose, even if the market is crashing like down to 80% in some of these cryptocurrencies. Diamond hands is what they call them, and they just continue to kind of hold on to it. I mean, it's a personal decision at the end of the day, but I don't agree with it. I certainly think that there's always going to be a risk to what we do, whether it's investment or outside of investment. So make the most of it, I think, is what Jack Bogle is trying to convey. And I agree with that, that, know that when you jump into a sports card or the sports card market or the stock market, know that there is that risk, and it's all about managing that risk and what you're comfortable with. And if you're losing sleep every night, having nightmares, perhaps you are definitely overexposed in your investments. So maybe it might be good to dial that down a little bit and maybe put it into much safer investment. There are certainly safer investment, but again, even real estate, there are risks to that. Even if you were renting out, condos or apartment complexes, like, things happen, right? Things that's absolutely out of your control. And, like prime example, I think, is the pandemic that happened in 2020, still happening in some parts of the world, where, if you were a successful restaurant owner and you decided to, franchise 10 different locations in April of 2020 all across the US, it's not in your hands, right? There was certainly a risk, and you knew that there was a risk of everything going to zero, and it happened probably, and you just kind of have to let that go, and think through how can you grow from that and learn from that and move past that, right? And so that's just the 3 things that I want to leave you with from Jack Bogle. Amazing investor, an amazing thought leader. So if you don't know him, I'll go Google him as well. But anyways, thanks for watching, and I will see you guys in the next video.